What's up, everyone? Welcome back to another episode of the Teach podcast. I'm your host, H.O. Salinas, and today we're diving deep into the heartbeat of the digital gold rush. If you've been watching the charts today, March 10th, 2026, things are heating up. Bitcoin is currently sitting at approximately 71,600 or $71,066. We've seen some serious volatility lately with global tensions and oil shocks, but the orange coin is showing that classic resilience we love to see. Today, we're breaking down 9 massive stories from Bitcoin Magazine that prove the game is changing from corporate giants doubling down to historic mistake being made by miners. Let's get into it. First up, let's talk about the diamond hands of the corporate world. Strategy, MSTR, you know them as the ultimate Bitcoin treasury, just spent another $1.28 billion to stack more BTC. While some of people are fearful, Michael Saylor's team is essentially saying, give me more. And it's not just corporations. Across the pond, Nigel Farage has reportedly acquired a 6% stake in a Bitcoin-related entity, showing that the political class is starting to realize they can't ignore this asset anymore. But with big money comes big regulations. The US Treasury is tightening the screws on crypto mixers, labeling them as primary money laundering. Concerns, it's a clear sign that the Wild West days are being reined in, but for those of us focused on the long term, it's just a part of the maturation process. Now let's look at the numbers. We just hit a massive milestone. 20 million Bitcoin have been mined. That means there's less than 1 million BTC left to ever be created. Think about that scarcity for a second. This is why the price is teetering, and I use that word loosely. $9,000 to $71,000. We've been bouncing around these all-time high levels, and the tension in the market is palpable. While the price consolidates at $71,066, the supply shock is becoming more real every single day. This next story is a bit controversial. Some public Bitcoin miners are actually dumping their BTC to pivot toward AI infrastructure. Bitcoin Magazine is calling this a historic mistake. Are they trading the hardest money on earth for a temporary tech hype? Only time will tell. But moving away from the underlying asset you mine is bold and risky move. Speaking of AI, there's a golden opportunity for Bitcoin to serve as the currency for AI agents. Think about it. AI doesn't have a bank account, but it can have a Bitcoin wallet. It's time to build the intersection of these two technologies. On the institutional side, the infrastructure is getting rock solid. NASDAQ and Kraken have officially partnered up, and Coinbase is now offering regulated Bitcoin futures. This is the bridge for the big money to finally walk across. So what's the lesson for today? Scarcity is real. Institutions are here, and the tech is evolving faster than ever. Whether we're at 71,066 or 100,000, the mission remains the same. Learn, understand, stay ahead of the curve. That's it for today's episode of the Teach podcast. I'm H.O. Salinas. Stay curious, keep stacking, and I'll catch you on the next one. Peace.